So Shell got really hurt in its last earnings. They really modeled their plan on $65 oil and staying there and rising. It didn't get there, and it's not rising from there either. What did you model your next sort of 30-year outlook that you unveiled today? What oil price does that depend on?
Well, again, anybody that's trying to predict the price of oil next week or next month, let alone in 30 years, I think is on a bit of a fool's errand.
So you need to run your models for cash flow.
What I will tell you is what we are doing. And over the next couple of years, in fact, in 2021, we will drive the break-even of the business down to $40. We believe that that's a very resilient price that enables us to withstand a variety of environments. So we run all sorts of scenarios, as you say. We run $60, $70 scenarios. We run $50 scenarios. We may run higher scenarios. Nobody quite knows what the future does look like. What we are trying to test is how does it look in a range of scenarios and how resilient is the portfolio.
And all of this ties into the plan that you unveiled. And what you drove home very hard when we did our Q&A was that it's a gearing, it's dividend, and it's the energy transition. The three things that shareholders want and the three things that you're committed to. There is just a lot of skepticism among investors that you can do all three at the same time.
I understand. And I think we have been listening to our shareholders. And as I said earlier, people want us to get our gearing back into range, which we can and will do. People want to know that the dividend is protected and is secure. And people want us to invest in and partake in the energy transition. Now, depending on what investor you're talking to and depending where you are in the world, the order of those priorities may change. The question for us is, can we deliver all three? And I fundamentally believe that we can. I think there is a sense out there that investing in the energy transition is somehow adding more and more and more capital to the system. What I said earlier today is that we are absolutely committed to capital discipline. Our current range is $15 to $17 billion. I made it very clear that we do not need to see that number rise, and that when we come back with our strategic update in September, that will be the capital guidance for the company in the years ahead. The question is the allocation of capital. And what I also said is that over time, you can expect BP to invest more and more into low to no carbon businesses. And at the same time, you can expect investment into oil and gas to come down over time. Now, what that is not, Alix, is a blank check to just go and spend money. We've been very clear, and I think you heard me say it today, that we will only invest into new businesses if A, we can generate scale, B, we can actually add something as BP, so otherwise an investor can go and buy a particular stock on their own, and C, we can generate a competitive return. So that is the framework. It is not a question of how much money are you going to spend, it is the quality of that opportunity.